Well, it's a bit of volatility out there. It's kind of a trading market you'd expect. So let's go and find out what's been going on the Superhero platform. Chief Executive John Winters joining us here on the program. John, good to go and see you there. A lot of volatility out there at the moment. How are the clients responding?
Morning, guys. Yeah, we are seeing people still looking for those bargains. They are looking to buy the dip. A huge range of different activities across the platform. Yesterday, we saw AGL as one of the most traded stocks on the platform, but looking back last week, some of those ones that did announce earnings, Fortescue, have been up there as well. But investors are being reasonably cautious at the moment. They are looking at what's going on with Russia and the Ukraine. They're nervous. They're nervous about inflation. They're nervous about rising interest rates. So we're seeing a huge amount of cash coming onto the platform. Customers are still signing up in record numbers, but it really is a time where they are sort of sitting back and looking at what they should be investing in, where the market's going, and how they're going to deal with some of these short-term and longer-term issues.
Okay, so if you had to call it, where, John, in what type of names are people looking for some shelter, looking for a bit of defensiveness? Where do these traders, these investors retreat to in these uncertain times?
Well, it's really interesting. If you look at our top five, I mean, it's just full of mining stocks. So we're seeing the gold miners, we're seeing the big commodity-driven mining stocks as the ones where we're seeing a huge amount of capital flowing in. It really is those real assets, those companies that are going to continue to generate big profits in the future that we're seeing net buying going into, and really shunning some of the maybe high growth but low margin or companies that are not actually producing income just yet. We've seen the buy now pay later companies really get smashed over the last few months, but particularly in the last couple of weeks. And I think that's going to continue. I think this world of the hyper growth stocks that are always raising money and spending cash, I think that is coming to an end as part of this cycle. And investors are looking for companies that are going to be around in 5, 10, 50 years.
What about Limetown? Because I was on air last week when it announced it's going to do a supply contract with Tesla. And I thought, well, that's going to be like a powder keg and explode, and the share price did. What did we see? How big volumes were going through?
Yeah, look, it was big. We've seen again net buying in that name as well. When you sort of stick an agreement with Tesla in there, it's it is no doubt going to attract a lot of investors. We did see a lot of trading in the name though, but broadly it was net buying.
And John, how about the travel names? We had the announcement a couple of weeks ago about the reopening of international borders that actually came to fruition yesterday. Are these still heavily traded names?
Yeah, they are. We're seeing Flight Centre and Qantas really up there. Qantas is bringing on more capacity to Perth now that they've opened up. So you've really got the domestic space, which is one of Qantas's most profitable units, getting back to pre-pandemic levels, and now being able to open up international travel as well. I think they're going to be well placed. But some of the other names in the US as well, they're performing quite well. Some of the airline stocks, the big travel companies, which I guess are the sort of the big brothers to Flight Centre, are tracking very well as well. So yeah, travel is certainly a theme in the market that continues to do well and continues to attract a lot of attention.